Welcome back, folks. In this video, I want to talk about entry on lower timeframes and provide more examples for my playlist that focuses on entry on smaller timeframes. In this video, I also want to talk about PD arrays, okay, discount and premium PD arrays. An array simply means a list, okay. Now, that list is basically ICT signatures. You will have your bullish ICT signatures and bearish ICT signatures. When we are looking for the market to go down, we are looking for entry into premium PD arrays, okay? The actual ICT signature doesn't change. For example, it could be a fair value gap, it could be a breaker, okay? It could be an order block. They will remain the same. It's where they occur that makes it a premium versus a discount in relation to the current range in price, okay? Basically, they call that the dealer's range. I'm not going to go into the dealer's range, but on this particular day, okay, this is Friday's trading. If we are looking for a short, as I was, and that's explained in a previous video, the video prior to this one, if you go back and watch that particular video, it talks about why I was looking for a short on this day on Friday, okay? And that short needs to be in the top end of the price range in terms of the weekly range, okay? At this price point, we are at premium pricing because we are at the top end of the current weekly range in terms of price, okay? So if I'm looking for a short, I want to be looking for a bearish signature at this premium pricing, okay? So therefore, we're looking for bearish signatures, okay? Premium PD arrays are simply bearish signatures in premium pricing, okay? So what are some of those bearish signatures on this chart? Well, you have this up candle, which is your bearish order block, okay? When price comes down and back up into this bearish order block, that is a premium PD array, the bearish order block, as well as you have these two down candles, which are the two down candles as part of this swing low. And because we've made a higher high here, these two down candles, predominantly the last down candle in that swing low, will become your bearish breaker. That is again a premium PD array. Okay, again, price is coming into this bearish order block and this bearish breaker right there. We also have sell side imbalance, okay? That is a fair value gap, right? A fair value gap is identified with three candles. You have a candle on the left, a candle in the middle, and a candle on the right, okay? Notice that there's no wick, right? No price delivery between the high of this third candle and the low of this first candle, meaning there is a gap, which is known as a fair value gap. That's a sell side imbalance, and is again a premium PD array because it is at a premium price level in the current range of price. Again, price is coming back into that fair value gap. So in this case, as price pulls back into this entire zone, we have multiple premium PD array items, which are the ICT signatures, okay? With the bearish breaker, the bearish order block, the bearish breaker, and this fair value gap, right? So three things that are telling us there's a lot of confluence of bearish ICT signatures at premium pricing. So all of those are premium PD array items, ICT signatures, okay? Now, that's 8:30, okay? And that is a adequate time, second hour, and 30 minutes within the second hour to look for entries, okay? Now, the best time to trade gold from my experience is 9:30 a.m. or 10 a.m., okay? Sometimes you're going to get entries early, like here, the market's pumping up at 8:30. That's fine too, okay? This is a very high probability entry based on the higher time frame directional bias. We have a breaking structure, okay? The market's moved down, okay, through this swing low, okay? Let's make these highs. With displacement, left a number of fair value gaps on the way down. And so as the market moves back up into these premium PD array ICT signatures, that is a high probability setup to expect pricing, repricing lower, okay? Now, if you missed that entry, you can see the market again goes down with displacement below this swing low, okay? These two up candles are also premium PD array ICT signatures. This is just another bearish order block. Once we trade below the open, okay, of that candle, out of these two sequence of up candles, okay? In this case, these two down candles are not the bearish breaker. It is known as a mitigation block because price here did not make a higher high, okay? But the strategy is the same. We're looking for price to move back up into these two up candles, which is your bearish order block, as well as these two down candles, which is simply the mitigation block. Same as this, just a different term, because price did not make a new high, therefore this is simply a mitigation block, okay? That entry there, that's the 8:45 a.m. candle, okay, that closes at 9 a.m. So your entries are typically at the new hour or 30 minutes into the new hour. I prefer not to trade in that first hour. New York opens at 7 a.m. Sometimes I do, okay? But the best setups are going to occur in the second hour, right? Or at 9 a.m. or at 30 minutes into that 9 a.m. candle, okay? Or 30 minutes into a new hour, like here it's 8:30. Okay, so 9 a.m. is also a valid time to take this entry so long as we have bearish signatures. So we've already broken structure, swing low, 8:30, back up into these premium PD array ICT signatures, as I've explained. We go down, displacement, again, now we have another bearish order block and a mitigation block, and 9 a.m. we pop into that bearish PD array signature. We can also expect repricing lower, okay? Now you have relative equal lows for liquidity below to target. So if one enters on this entry at 8:30, a nice target would be at those equal lows. You can get over 100 pips there. Can we grab 50, 60, 70 pips? Yes, we can. Okay. Always look for, so the market's always engineering liquidity on the way up as it's developing these bearish ICT signatures. Okay. You always need to have liquidity below. Okay. You also have this low below under which resides a lot of stops. Okay. Where lots of retail traders or large traders have long from. Okay. Even under these lows, there will be stops as the market's making new highs. Traders shift their stops under the most recent lows. So there'll be stops under here, there'll be stops under here, there'll be stops under here, definitely under here. Okay. That specifically because that is a previous daily low. That's Thursday's low. So as the market's moving up, we're now into Friday, there will be stops residing under that Thursday's low from anyone that's already long this market. Okay. Now I'm going to drop into a lower time frame. Okay. Here, let me just firstly also touch base on the 9:30 candle. Okay, this candle here, your 9:15 to 9:30 candle. This is your 9:30 to 9:45 candle. At both of those times, 9:15 to 9:30, I prefer 9:30 to 9:45. You'll also see and be able to identify a signature, right, in line with your directional bias. The reason why 9:30 is a good time to trade is because it is the New York stock market equities open, okay? And that is when you'll see a lot of volume. Also, most of the time, that is after, okay, the 8:30 news. Sometimes news is at 10 a.m., so you might have to wait for after 10 a.m. But when news is on 8:30 a.m., if you don't want to be in that news announcement due to the elevated risk, then wait for 9:30 because 9:30 will also give you a valid entry. Again, 9:30 or between that 9:30 and 10 a.m., we are pushing up into this up candle, which is the bearish order block, okay? Prior to 9:15 and that 9:30 candle, we've broken structure. Again, we've taken out these lows. So then you can expect the market to pull back into the bearish order block, okay, which is that candle there pushing into this mitigation block, okay? So again, even from that level, when you've moved up into that bearish order block at 9:30 in that 9:15 to 9:30 candle or 9:30 to 9:45 candle, okay, you can simply, if you take it from there, that's the 9:30 to 9:45 candle coming into this bearish order block, we can take that low, equal lows, easily get 50 pips or target the previous low and get a bigger range from that move down here. In this case, over 150 pips. Okay. Now let's drop down to a 5-minute chart. Okay. And again, it's all going to come down to time. Okay. So let's look at this a little closer. Okay. And we can see that this is all that movement. Okay. Down below this swing low. Let's actually mark where we break structure on the 15-minute chart. Okay, so we've broken structure here on the 15-minute chart. This is all before 9:30, okay? So I'm going to put a line just there so we can find this easily on a 5-minute chart, okay? So when we come to the market on a 5-minute chart, okay, and we're coming to the market and we want to look for an opportunity around that 9:30, what do we see? So there is your 9:30 to 9:45 candle, okay? And you can see that at that point, we've had this move down. It's broken structure on the 15-minute chart. We're dropping down into a 5-minute chart. Firstly, we can see equal lows below. Right there, the market is engineering equal lows. So very good chance that we are looking for lower prices, as we already know, based on what's happened on the 15-minute chart and on a higher time frame, based on the analysis. And we're looking for shorts on this day. Okay, so we have that directional bias. Again, if you want to understand more about why I was directionally biased to the downside on Friday, look at the video I posted prior to this one that talks about that in more detail. Okay, but what do we see? We see this 1, 2, 3 candle pump up on this 5-minute chart. And what's it doing? Coming into this fair value gap. Okay, again, that is a premium PD array bearish ICT signature. That is sell side imbalance. Okay, and it's coming up into that fair value gap. Okay, at what time? This is a 9:30 to 9:45 candle. We're already bullish, already bearish. Okay, on the day and in this time zone, based on the 15-minute chart, we're simply jumping down, looking for an entry at 9:30 to 9:45 on a 5-minute time frame. Entry into this fair value gap when that candle closes, simply back down to these equal lows is 50 pips. You don't need big movements to be profitable, so long as your entries are in alignment with the higher time frame directional bias and at the right time. timing is the most important aspect, okay? And we can see it's coming into a premium PD array, in this case, a bearish fair value gap, right? Sell side imbalance, okay? Now, 10 o'clock is also a time, so you can either hold, take your profits under these equal lows or wait for the 10 o'clock entry. Okay, 10 o'clock again comes back into, now we have these 3 up candles, okay, that we traded below, okay, and this 10 o'clock candle on this 5-minute chart is simply coming into these 3 up candles, which are your bearish order block, as well as reclaiming this bearish fair value gap. Okay, this is just another pump for the dump. So you can also wait for, you can be short at 9:30, this 9:30 to 9:45 candle, okay, wait for the 10 o'clock candle to print, because it'll give you another pump for the dump, and then you can target again from this entry to the low of the 10 o'clock candle, okay, which is over 75 pips instead of these equal lows, okay, again, or you can be targeting these equal lows that I've also pointed out. This is all before the change in structure, because that is engineered liquidity, the pump for the dump, okay. So again, you could be coming entry at your 9:30, 9:45 candle inside of this bearish fair value gap after getting 15-minute breaker structure and having a higher time frame directional bias to the downside, okay, targeting these equal lows, okay, yielding over 70 pips, or as I said, below the pump up at 10 a.m. Okay, you can wait for the 10 a.m. candle to print, because it'll give you another entry, okay. So I just want to provide you an example of how to enter on lower time frames at the right time. You will always have an entry at 9:30 a.m. or 10 a.m. in alignment with the higher time frame directional bias, okay, when the market is poised to move in a particular direction, okay. Targets are going to be, if you're bearish, you should be looking for targets below previous daily lows, because that's where most of the liquidity, all the stops from other traders who are long will reside, okay. So you can now go back, study this chart, and identify entries on 1 minute, okay. I've given you plenty of examples in this playlist of entries on 1 minute. This is now an example using the same framework, identifying entries on 5 minute. Again, time is the key, okay. Here on this particular day, 8:30 a.m. was the best entry to go short, okay. But often it's 9:30 a.m. or 10 a.m. where you'll find the best setups on a day where you're expecting the market to move, given a higher time frame directional bias, okay. So study the charts, okay, and look at this on a 1 minute time frame and see for your own study how you could have entered and refined your entry on a 1 minute chart. I hope the video is useful. I will now talk with you in a future video.